All right, let's dive right in. Today, we're cracking open a really detailed analyst report from the folks over at UBS. We want to figure out exactly why they are so incredibly bullish on WuXi AppTec, a huge player in the pharmaceutical services world. So let's see what their analysts found.
And boom, right off the bat, the report doesn't mince words. UBS is making their position crystal clear. They're not just saying they like WuXi AppTec, they're calling it their absolute top pick among its peers in China. You know, a statement that strong from a major bank like UBS just makes you ask one thing: why?
And here's the number that really backs up all that confidence. This is UBS's new price target for the stock. And yeah, that's a pretty big jump. So now we're going to unpack the thinking that got them to this exact number.
So the main headline here is obviously a strong buy signal. But what's really interesting is that UBS isn't just, holding the line. They're actually showing a major increase in their conviction. We're not just talking about them repeating an old recommendation here. They've boosted their price target from around 104 Hong Kong dollars all the way up to almost 120. That is a serious upgrade, and it tells you that whatever they've seen recently has made them a whole lot more optimistic.
So what is the single biggest reason for all this excitement? Well, it pretty much boils down to one word: tides. This one specific part of WuXi AppTec's business is the main engine just driving these fantastic forecasts.
Okay, so before we get into the weeds on tides, let's just get on the same page about what WuXi AppTec even does. It's what's known as a CRDMO, and as the biggest one in China, it's basically a one-stop shop for pharmaceutical companies. It helps them with pretty much everything from early research and development all the way to actually manufacturing new drugs.
And that brings us to tides. Now, this isn't a brand name or anything. It's a whole category of newer, really complex drugs. Think peptides, nucleotides. You've probably heard of the most famous examples, the GLP-1 drugs that are everywhere right now for diabetes and weight loss. Well, WuXi is a key manufacturer in this absolutely red-hot space.
And here is the engine. Wow. Revenue in WuXi's tides business just exploded, surging by over 141% year over year. And no, that is not a typo. This is the kind of insane hypergrowth that really makes analysts sit up and take notice. It's the core piece of evidence for that bullish view from UBS.
And look, this isn't just a story about something that already happened. The momentum is expected to just keep rolling. WuXi's own management jacked up their TIDS revenue growth guidance for the year from an already amazing 60% to a jaw-dropping 80%. That tells you this growth has some serious legs.
Okay, so tides is clearly the star of the show. No doubt about it. But a really key part of the UBS argument is that WuXi AppTec is not a one-trick pony. The report makes a point to highlight signs of strength in other parts of the business too.
See, the company's strength isn't just about tides. Its more traditional chemistry business, the non-tides part, has also bounced back to growth, posting a really healthy 11.3% increase. This points to a much broader recovery and a business that's more resilient and well-rounded.
The report is also pretty balanced when it looks at the company's testing segment. On the plus side, revenue growth actually turned positive in the second quarter, which is a fantastic sign. But on the flip side, the analysts point out a clear challenge. There's fierce competition inside China, and it's squeezing their profit margins. So it's a bit of a mixed picture there.
Okay, so we've seen the operational side of things. You've got this massive tides growth, some stability in other areas. But how does an analyst take all that business speak and turn it into cold, hard financial numbers? Let's take a look.
Well, here's how. That strong business performance flows right down to the bottom line. UBS has raised its earnings per share estimates for the next few years. You can see they're especially optimistic about 2027, where they now expect earnings to be about 6% higher than they thought before.
So how do you get from those future profit numbers to a stock price today? Well, in this case, UBS used a method called a discounted cash flow, or DCF model. It's a pretty standard way to do it. You basically estimate all the cash your company is going to make in the future, and then you work backwards to figure out what all that future cash is worth in today's money. So naturally, higher future profit forecasts mean a higher valuation today.
Now, of course, no analyst report is complete without looking at the other side of the coin. Even with this really positive outlook, UBS is careful to point out the potential risks, the things that could totally derail their forecast.
The report flags 3 main headwinds to watch out for. First, project delays. What if fewer of those early-stage drugs actually make it all the way through the development pipeline? Second, and this is a big one, geopolitical issues. An unexpected flare-up in international tensions could definitely impact the business. And third, a general slowdown in R&D spending from their clients. These are the big variables that could change the story.
So in the end, the UBS report paints this picture of a company that is just firing on all cylinders, really powered by this explosion in new drug technology. The story is compelling, for sure, but it's all happening in a world with some very real geopolitical and economic risks. And that leaves us with the ultimate question, doesn't it? Can this incredible growth engine keep powering through those potential wins? Well, that's the billion-dollar bet.